Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Senior Index Specialist with Nasdaq Investment Intelligence, for a monthly review on January index performance. Mark, it's great to see you as always. Welcome back to Trade Talks.
Great to be here as always. Thanks, Jill.
All right, and Mark, we can see on your first chart here, it is no surprise that global indexes did not fare very well for January.
Yeah, I thought I'd start with this one because there has been, quite a lot of discussion about underperformance in NASDAQ stocks, whether it's the Nasdaq-100 or Nasdaq Composite. But you can see on this first assortment of indexes, the underperformance was pretty broad in January, not just within the US, but globally, especially outside of EM. You can see EM was kind of an outperformer there on the right-hand side. Just about flat for the month, but most other developed markets, Europe, Japan, and then in the US, large, mid, and small caps all had a pretty poor month. We track about 100 of these indexes every month that have kind of special significance to us here at NASDAQ. Over 90% of them were negative last month, and I think the average loss was about 7%. On the left there, you can see the only one in green, the only one positive of these featured indexes is the KBW Bank Index. Banks, of course, have gotten a lot of, airtime over the past couple of months with a rising rate environment and with an inflationary environment being more favorable for financials. So maybe not so much of a surprise there, but you look up and down that other chart on the left, that underperformance was pretty, pretty stable throughout any measure of, for example, Nasdaq-100, whether it's equal weighted, cap weighted, tech only, X-tech, momentum. Pretty consistent underperformance for January.
Right. And then if we take a look at the next chart here, I think it's interesting that you saw multi-asset indexes and dividend indexes that did well. And that seems to kind of be carrying through February as well.
Yeah. I mean, this chart's had a kind of a lot going on it. On the left, you can see a bunch of the NASDAQ OMX green economy indexes. Those had a pretty poor month. Look at solar down almost 20%. And the Nordics being DM on the bottom left there, not immune from the general weakness. On the right, though, you're absolutely right. There were pockets of, the income generating universe within equities, whether that is more of a value tilt or whether that is kind of a sustainable dividend play. You could see that being especially the case up in Canada with the Select Canadian Dividend Index and with the international dividend achievers. And the U.S. dividend achievers, both positive for the month. Not really sure what drove the other kind of dividend indexes weakness last month. I'm sure there's a lot of different sector biases within those that were probably responsible for that. But yeah, really one of the few bright points in a down month for equities, some of these dividend strategies.
Right. And then moving along here, we also take a look at the NASDAQ Dorsey Wright indexes as well.
Yeah, we've added some indexes to this one. We were highlighting the Dorsey Wright suite, which is mostly a momentum kind of technical strength leadership suite of indexes. A lot of tracking products behind this. You can see energy tech leaders, right? That's the big one that stands out here, up almost 13% last month. Just a really incredible spread when you look at that versus the healthcare tech leaders or the technology tech leaders down 16%. You're talking about 30 percentage points of outperformance in a single month. That's kind of rare to see in any kind of pure sector allocation, and especially with this momentum one. What can I say? I mean, it's been a really strong story for energy as inflation has picked up, as that has impacted the prices of a lot of things, but especially the energy complex.
Right. And then to wrap up here, Mark, when we take a look at the thematics, again, no surprise to see it mirror what happened in the market in January. And I think, a big part of the story is coming back to, more in line valuations, because a number of these sectors really took off, especially over the past couple of years when the system was just so flush with liquidity.
Exactly. Yeah. I mean, we're pretty much at our 1-year anniversary right now of when a lot of the speculative parts of the market peaked early February of 2021, things like SPACs, IPOs, the ARC complex, things like small cap biotech. And we have, junior biotech down towards the bottom there is the worst performer in January, down 18.5%. NASDAQ biotech, regular biotech didn't have a great month either, down 12%, but that kind of gives you a sense of the weakness. Even though it was broad, it was more pronounced in the parts of the market that did get ahead of themselves, maybe in terms of valuations last year, and are more sensitive, frankly, to rising rates, potentially slowing down the economy, impacting kind of, the present value of future cash flows, which for a lot of these speculative thematic areas are far out into the future, right? A lot of these products, even though they've done incredibly well over many years, give you exposure to kind of newer industries or subsectors that are developing, where it's kind of unclear really what the growth trajectory is going to be. We know there's solid growth aspects there and prospects, but definitely when you think about what happens to, for example, a company that's got profits 10 years out, you got a 1% rise in interest rates. If you got $100 of profits 10 years out, that 1% rise in interest rates basically lowers the value of those profits in today's dollars by almost 10%. So kind of, baseline expectation, if we get a 1% rate rise, you should price in a 10% reduction in anything that is, really, really kind of speculative, far out there in terms of generating cash flows. And that's unfortunately some of what you see in this thematic complex.
All right, Mark, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.